please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, things are not as bad. I mean, the market is not really breaking down or anything like that. At least on the Nifty, it's only down 0.25%. The problem is in the mid-cap side, where the index is now down about 1% and advanced decline is about 1:2. And the bank Nifty and the PSU banks in particular are weak today. Ashwani and Mitesh with us for BTST calls. Ashwani, your thoughts first. Down 26 points on the Nifty, not much, but of course on the bank Nifty, we're now down full 1%. Any index trade and stock calls now?
See, just to continue what we were talking about before the break, okay, fine, PNB has a problem, PSU banks have a problem, but why is the entire financial sector selling off? So, somewhere the market is probably, trying to price in an overpriced sector. It's very easy to extrapolate that, in affordable housing there's a problem. There's some Moody's report. In MSME, there could also be a problem. So is this a cumulative derating of, all kinds of financials? I think that needs to be figured out, because otherwise just PSU banks should be lower, housing finance should be higher, or other financial stocks should be higher. So that's a problem that I have right now. For the moment, I think index bank Nifty, I think you can still probably carry home short positions for tomorrow and see what happens, because I don't think it will recover substantially. On the Nifty, it's sideways. I don't think there is too much to do out there. The secular trend seems to be on the bank Nifty. As far as individual stocks are concerned, SBI is a sell with a stop of 272, target of 258. DLF is a sell with a stop of 225, target of 212. And NTPC is a buy with a stop of 162, target of 174.
Okay, Mitesh, let's get your ideas as well, and I mean your thoughts. Would you like to take any positions home on the index? Any long or short there?
So I think maybe a long on the Nifty around the 10,550 mark with the 50-point stop loss targets of 10,630 and 700. We are close to support levels. I think, this gap which happened yesterday, I think is an important area. But I do fear Bank Nifty if it starts breaking below this gap level, and the corresponding levels for the Bank Nifty index would be below about 25,300. So if that breaks, then I think I would not be very positive on the Nifty either. But for the time being, I think I would be okay buying into Nifty. Apart from that, I have two BTST calls. MGL is a BTST with a stop at 1,035 for targets of 1,062, and Castrol India is a BTST, keep a stop at 198, look for 205 as the target.
Fair enough. Kunj Bansal is still with us. Kunj, there's a second round of selling that we are seeing in mid caps. What kind of stocks would you want to buy or would you want to add in your portfolio on this weakness?
Yeah, so we are in a phase of the market wherein the market doesn't seem to be taking any clear direction. We are still, for the month if we talk, we are down almost 4% on Nifty and almost similar amount on mid cap and small cap indices. Although at the same time, if we look at the recent lows, we are again another 2-3% up from the intra-month lows that were touched about a few days ago. So as I said, in the absence of any triggers, neither positive nor negative, market is remaining directionless. And in that phase, even otherwise also, if any investing has to be done, will have to be done for the medium term on the long side. It's very difficult to find shorter term trade ideas in these kind of market. And since we have been continuously talking of, and rightly so, because it is contextual of the financial sector space, more specifically public sector banking, which is where I don't have any pick. But if I extend that, a lot of business opportunity that these banks will lose out because of their management bandwidth going into sorting out all these issues, that business opportunity will be taken up by the NBFCs. And which is where some of the stocks that have shown some correction in last 2 months of volatility can be looked at. So specifically, if you want me to name one, L&T Finance Holding is one such stock which I think has a business mix of both on the corporate side as well as on the retail side. And as I said, such are the companies which will take the business loss that the public sector banks will have, will be taken up by these companies and will be beneficiary. In any case, if we look at the return on asset number for this company, they have been consistently increasing from the lows of 1% plus and are likely to move to close to 2% in the next 1.5 years. So that is where the opportunities lie.
Okay, there you go. One idea from the NBFC space. Well, Anuj, I mean, for what it's worth, if you want to be an optimist, the market is at least holding. We haven't, like, you know, there's no cave-in in the last 1 hour so far. So does that give some hope that if we have stability overnight, if there's no major statement by Mr. Powell, then maybe the bulls will have an attempt again?
Oh yes, for sure. You know, this is not a breakdown by any stretch of imagination. Surabhi, we are down what 0.2% on the Nifty. The problem is, you know, that banks trade is that resuming, because you know that is your biggest sector. If the biggest sector is under pressure, in that case, obviously there would be follow through. So today, for example, IT has helped the bulls. A couple of other stocks like Reliance obviously have helped the bulls. So that point is taken. But I think the biggest indicator would come from the advanced decline and from the mid-cap side. I think that would be the key monitorable for next few days. That would tell you that whether, you know, what you had was just a classical counter trend move, or whether, you know, what you had today was an aberration and the general trend is up. I think you'll find out over the next 2 or 3 days. But it was not going to be just one way straight up. That was not going to happen. And, you know, the last 2 days, you're coming off such a low base, and, you know, the market had such a, you know, bad February series. So obviously there was some baggage which was there. So that was some short covering. But the test would be to take out the 10,650, 700 kind of congestion zone, and that would require some effort, especially from the banks.
Absolutely, and maybe you know, healthy dose of good news. We haven't had that in a while, right? Well, on that note, let's get an insight into what the talk has been in dealing rooms today. Nimesh is joining in with all the buzz. Good afternoon, Nimesh.
Afternoon, Surabhi. The only thing which has been discussed, Surabhi, is the PSU bank stocks and what next, you know, in terms of stock prices for them. You know, there are a lot of rumors doing the rounds, whether there could be more skeleton out of this PSU banks, you know, especially after the PNB saga. There are a lot of question marks being raised, you know, whether there could be a few more companies within the gems and jewelry space which can hit the PSU bank stock. So clearly, that's a space where even the most hard bull is now, you know, giving up the faith in the PSU bank stocks. So that's clearly playing out into the trade. In fact, even in terms of flows, the flows are mixed with even the DRs are not looking to buy the falling life in the PSU bank stocks. So that's clearly, you know, visible in the delivery data. From a technical point of view, clearly, you know, on the upside, 10,650 is a very strong resistance. You know, only then probably you'll see a bit of an upside from those levels. Till then, it's going to be a pretty much range bound between you know, 10,300 and maybe 10,650 on the Nifty. From a macro point of view, you know, today they have the GDP data to watch out for, but there are 2 state elections. You know, the results will be out on the 3rd. That will set a tone for the political landscape as well. So, you know, a lot of data to watch out for in terms of political data, GDP data. But from a technical point of view, it looks like, you know, we are stuck in this range, and the big pain in the PSUs is still not over yet. Is the feeling that I'm getting from most of the dealing desk.
Okay, Nimesh, thanks a lot for that. That's the word from the dealing rooms. Really been a, you know, bit of a dichotomy here, because there are a couple of stocks like Infosys, for example, which is now making high of the day. And if you take a look at Reliance, that's also doing quite well. We just want to see the index, the Nifty contribution, not the bank Nifty contribution, what you saw a while back, because on that it's going to be interesting. You have these 2 stocks, Reliance and Infosys. Okay, Reliance is contributing about 10 points, Infosys about 5 points. So that's about 16 points from these 2 stocks. On the right hand side, what you see is only financials. So ICICI, SBI, HDFC, Axis Bank. Ashwani, you know, in that, at least intraday, you saw the likes of IndusInd, Kotak making highs of the day as well. So could this be a case of once again going back to the retail stocks? HDFC Bank, for example, hasn't fallen much over the next few days. Could that be a good trade?
See, if you have to sell the banks, you have to hold the market up, and these 2 or 3 stocks held up the market. I think HDFC Bank is almost at the lows of the day also. So I think the entire financial space is coming under the hammer. I don't think the market is now in a mood to even differentiate. Axis Bank is down 2.5. ICICI is down 1.7. So I don't think IndusInd and HDFC Bank can pull up the bank Nifty. I think the bank Nifty will probably is resuming its downside. Now, you know, in a choppy market, when the markets are weak, bank Nifty will fall, IT will go up. and when Bank Nifty is flat, maybe the market will go up. But it's clear that banks have some serious tailwind now, and people are reducing weightage of financials in their portfolio.
Okay, some more stocks that are interesting and are on the move. There's buying on Symphony today. There's a 5% up move over there. And Avenue that we were discussing earlier, but it's a 52-week high for the stock, blue sky territory, 4.5% up. Any thoughts on some of these mid caps that are moving around, Ashwani? Avenue in specific?
See, Avenue is a fairly strong stock, and any sort of correction, it had corrected to I think 1150 thereabouts. So that was a good place to buy it. Maybe on corrections towards 1280, 1270, Avenues should be bought, and you'll probably see 1550, 1600. So some of the mid caps like Motherson, etc., they need to be bought.
Okay, all right. Well, on that note, we're going to thank Kunj for being with us this afternoon, and we will move on to some more market opinion. Earlier in the day, we caught up with Andrew Holland, Chief Executive Officer of Avendus Capital Alternate Strategies. We began by asking him what would be his base case scenario for this market.
What we've seen in the past week or so is a lot of the Fed members just coming out and trying to soothe the nerves of the market, saying, great growth, but we're not going to be too aggressive. So, Jerome Powell, who's the new Fed chairman, I'm sure when he delivers today, will really kind of reiterate that and try and make sure that the market's feeling okay. Now, the risk to that, obviously, if growth does accelerate a lot quicker, then the market will price that in, and we'll get more volatility. But I think in the very short term, we're back to where we are. All the the VIX indices globally are below 20. Bond yields have stabilized. So we're back to where we were. But the good news, I suppose, is that complacency about everything is less than it was, and markets will now follow what we see from the data coming from the US, because you can't have a Fed too far behind the curve, that's for sure. So I think the markets, if they can breach that kind of 10,650, probably have a more momentum. But what the risk is, as we've seen, is if global markets head downwards again because of fears of rising inflation. So I don't think we're out of the woods, but we're in a better place than we were maybe 2-3 weeks ago.
About 2-3 weeks ago, the advice that came in from most market experts and watchers was it's better to sit on cash for now and let this volatility play out before taking a big call on the index or on investments. Has that call changed now, or do you think some amount of money should be put to work?
Yeah, I mean, some of the obviously the stocks which have been beaten down, some of say the private banks, for no particular reason apart from you can get liquidity from those stocks. Obviously are the ones to be nibbling back at now. So it gave you the chance to kind of realign your portfolio from maybe less quality to quality again. After the problems with PSU banks and PNB, I think that's just highlighted why you need to be in private banks only. So perhaps those kind of things just help you kind of reassess that the quality is where you should be, rather than the whole market's going to keep rising and mid and small caps will make you double your money overnight type of thing.
So let me extend that question. Clearly, I mean, you're advising staying away from PSU banks for obvious reasons. Buy into private sector banks. What about NBFCs? Because simultaneously, there's been this whole talk about the way bond yields have moved and whether cost of money is just going to start to pinch.
Yeah, I think it's a sector which you've got to be a little bit more careful about, because I think bond yields will continue to rise a bit more in India yet. I think the rupee will probably come under a lot of pressure over the next few months as well. So, perhaps the switch was really from NBFCs, which had a great run, more towards the IT sector, which anyway, we kind of become more neutral on in our thinking in terms of the fundamentals, and you're starting to see at least some kind of growth starting to come back for the sector. It's still nowhere near what it used to be, so I'm not excited in that respect. But from a you know, a stabilizing plus the rupee depreciation, which I'm expecting, then you know, you could see a lot more favor towards this sector in the very short term. So that's the kind of thing, that switch that we did some months back, actually.
Are there any shorts as well in your fund right now? Are you hedging via anything, or is it only longs for now?
No, we've reduced the short exposure, Anuj, obviously from where we were, and you know, there's certain sectors and stocks which, you know, remain out of favour in our minds, and whilst we're not you know, so overly negative of PSU banks at the moment because of the recent falls, you know, any rise kind of gives us the opportunity to add those if we need to. So, you know, I think the strong sectors, I think for the next few weeks will probably be autos, where the growth looks to be continuing to be very, very strong, and that will probably be reflected in the part makers as well, auto part makers.
Last 5-10 minutes of trade, you can see what the ticker is telling you about Bharti Airtel. Now, some of that has offset a fresh round of selling on the Nifty Bank that we've seen. It's because of moves on Bharti, sustained buying on Reliance that we've seen, some incremental flow on you know, a couple of tech names like Tech Mahindra. The Nifty Bank continues to struggle. Look at that index. I mean, absolutely no sign of recovery out there. Prashant Prabhakaran, a senior president and CEO at Yes Securities, is with us on the show now. Prashant, are you going out and buying any PSU bank? Even IDBI Bank, maybe? I don't know. PNB, double digits now?
No, Survi. Frankly speaking, very disappointed with not just the PSU, the PNB scam that broke about, but also the fact that SBI gave in the NPA figures which were way ahead of, way higher than what we had anticipated in that space of. So if the mess is still not clear, then we have a problem on our hands, because BFSI, your credit cycle, 55% is run by PSU banks. The good portion, the better way to look at it is that private banks and NBFCs have a space to fill up further. So it's a good buy into your books at this point of time. But PSU banks, the disappointment continues. I don't think so there will be a credit cycle offtake that will come in. The recapitalization, which was the news which had driven it up, has now brought it back again to the knees because of the fact that one simple episode might end up becoming a long-term problem, which will affect the markets in the short and medium term for quite some time.
Okay, by the way, there is some buying as well in a couple of names. Surabhi pointed out Bharti Airtel. From the broader market, just take a look at MRF's intraday chart. And this really is interesting, and you know, towards the end, it looks like someone's just buying MRF. 200 rupees higher, from the low point. There's quite a bit of recovery. This is looking interesting. Let's see if there's other tire stocks as well where you've seen some moves. Let's see CAT, Apollo Tires, or is this just an MRF specific? Not JK Tires, the CAT and Apollo Tires. Let's pull out those two, the big ones. No. So it clearly is just an MRF specific buying that you're seeing right now. Both Apollo and CAT down quite a bit. So MRF looking quite interesting. Mitesh, used to be your favorite stock, this one, MRF. Thoughts here and the big move that we're seeing now? Mitesh?
Yeah, I said this still out. Hello?
Yeah.
Yeah, am I audible?
Yes.
Yes. So still outperforms. I think this stock remains in an uptrend, and despite the correction, I think, you know, I would be comfortable buying into this one. I think once it starts getting past 74,120, I think expect another 2,500 to happen on the upside. So I think the chart pattern is quite positive, and in this rally itself, I think this could be one of the outperformers.
Okay, Prashant, good afternoon. Your thoughts on tire space?
So actually we are very bullish. Quite a bit about of our advisory has moved into your auto and auto ancillary space, including the tire space that has been there. So it's a clear buy from our side on Maruti. You have Motherson Sumi on the auto ancillary space. You have LG Balakrishnan, that entire space. C8 remains a buy from our side into the tire space again. So this is an area which looks interesting. The growth will continue irrespective of what happens on the banking, the BFSI space that is there. So this, along with maybe infra, couple of things that you can start nibbling at and start building up a portfolio for the long run.
Okay. Anu, just wanted to point out, you know, OBC and maybe even a Union Bank, if we can get that on the screen. You'd say just short covering maybe because people have made a lot of money, even those who went short at the right time. So this would be just a short covering move perhaps?
You know, OBC is slightly different case because OBC is in F&O ban. So what would have happened in OBC today is that you generally wouldn't have been able to short today on OBC. On OBC, you know, you'd already seen this move yesterday, for example, when that news had come. You'd already seen a lot of shorts, and it's been a rank underperformer. So that's completely technical, picture which is being played out on Union and a couple of others. Just taking some money home. The way these stocks are reacting right now is that even if you tomorrow morning come and whatever these stocks do, if you take a fresh short trade, that's working. So you're not taking that overnight risk. That's my limited submission. And look at PNB, that on most days is ending at low point. So on that, perhaps traders are just extending their shorts. On the others, they want to take money home by the end of the day. Next morning, just try their luck again. PNB, of course, is a different case altogether. That's continuously making lows of the day and ending there. That we know is because of a reason, of course.
Sure. Ashwani, this move on Bharti Airtel, is it anything more than just maybe an intraday last hour sort of a move? Any levels worth keeping in mind on Bharti now?
See, I don't think it's in any sort of great uptrend. But, if you have to keep the market higher, then you have to look for stocks which can do that. It's below its 200-day moving average. Even if you buy, say with a stop, say around 410, I think maybe in a good market you could get 475, 480. That way it's kind of low risk. But otherwise, I don't think it's doing too much. For me, I think the bigger story is not PSU banks. The bigger story is private banks. Because all of them have fallen today as if, they are also expecting some frauds. So if private banks also cast their lot with PSU banks, then, Bank Nifty is in trouble.
Okay, and if Bank Nifty is in trouble, Ashwani, in that case, this rally is at risk?
See, then, the odds of 10,600, 650 getting crossed, they drop dramatically. While we could spend some time in this range while, IT goes up and banks go down, etc. But finally, as we've seen in the past, that everything finally collapses down. So from tomorrow, you need to watch out that whether the privates take up the slack or they also start to fall along with the PSUs.
Okay, by the way, just one more name that I want to point out. You spoke about MRF. Godrej Consumer is the one which is making highs of the day as we speak. The gas stocks also are ending at the high point right now. That's Godrej Consumer for you. Gas stocks, of course, Mahanagar Gas, IGL, not GAIL, the distribution companies, Mahanagar Gas and IGL. Both of these stocks are nearly there. Petronet LNG as well. That stock is ending at the high point of the day. So there are a couple of stocks. And in the index, apart from Bharti Airtel, which is ending at the high point, there's also Hero MotoCorp, which is ending at the high point right now. Just take a look at that intraday move on Hero MotoCorp, looking quite okay. Thoughts on this one, Prashant? Hero?
So your overall Nifty has been managed pretty well off. Logically, with the BFSI fall that has happened off, you should have had a Nifty which is much lower. So your individual moves, according to me, it is time to build a portfolio with the large caps that will be there. Empty off your susceptible names in your portfolio. Move out your weaker stocks and build a portfolio for the long run. I don't see Nifty going anywhere in a hurry, at least for the next 3 to 6 months that is going to be there.
Okay. Today is the day Moody's has chosen to lower the outlook on IDBI as well, by the way. So that stock was flashing 7%.
We just had that flash out there. Stock is still down 7%. Even IDBI has finally managed to crack. Look at that. Moody's changes the outlook to positive from stable earlier. I mean, I wonder whether they're factoring in some kind of a deal.
Oh, I thought it was reverse earlier.
Yeah, even I read that flash twice, but they've actually upgraded the outlook to positive from stable. It's not shown up on the stock much because, I mean, there's still about 2 minutes to go for trade to close out. We're not seeing any kind of a spike coming through. But I guess, Anuj, on this one, I mean, the punt is that someone will come and buy, but I don't know if that punt is under question, looking at the problems the sector is facing.
Yeah, right now, no one is in the mood to buy PSU banks. Let's put it that way and leave it there. But for the day today, of course, it was a day of sort of two halves, in a sense that you had the first half where things looked quite okay, and at least on individual stocks on the larger banks like HDFC Bank, they were still looking okay. But by the end of the day, most of the stocks, especially in the index, in the large cap stocks, were actually towards the low point. So the Bank Nifty is going home with 300-point loss. The Nifty was spared the blushes because of Reliance and also Infosys. So these two stocks really contributed a lot on the way up. The mid-cap index, of course, was down about 1%. In terms of individual stocks, it was banking all the way. State Bank was down 2.5%. Axis, ICICI, Kotak, HDFC Bank, all of them were down. Maruti, that selling has resumed in Maruti, down about 1%. Sun Pharma was down 2%. Ambuja Cement was down about 4%. On the way up, of course, Reliance and Infosys, as I said, Bharti Airtel was up 2%, Dr. Reddy's was up 2%, and NTPC is going home with about 1.5% gain. The PSU space, of course, was down, but there were some other moves as well in the mid-cap.
Oh yeah, absolutely. I'll actually start off with where the weakness was quite apparent. So obviously, I mean, the stock of the day is going home with gains with losses of 13%. Then others like Bank of India about 8% lower, IDBI 6% lower. Canara Bank. So the entire PSU lot was obviously on its way down. Some of the NBFCs have had a tough run today. So DHFL is going home with a cut of around 3.5%, 3.5%. PFC undoing some of the gains of yesterday. Again, about a 2.5-3% drop there coming through as well. Let's pull up M&M Financial. That stock was weak for most part of the day. Manappuram is down about 0.5%. So not such a great day for NBFCs, barring Gru Finance, by the way. Pull up Gru in an otherwise listless market where financials were not of interest. Gru, okay, so now it's actually cooling off, but just about till half an hour ago, the stock was up almost 4-5%. Anyway, let's move on. So some weakness on Just Dial, weakness on a Reliance Capital. That's been quite apparent today. Delta Corp, Jet Airways, these were stocks on their way down. Fortis Healthcare, tomorrow is the all-important board meeting. Remember, they have to declare Q2, Q3 numbers tomorrow, or else the stock moves out of F&O, says the NSE. So that stock's down about 3% as well. If we talk about other noticeable losers, Oberoi Realty undid some of the big run of Monday, so 6% down on that stock. Some selling on JP Infra as well. But all is not lost. So let me talk about the gainers. Today's been a great day for Avenue Supermarts, 5% up on that counter. Of course, the Graphite Twins had a good day thanks to the Jefferies note. Jefferies still believes a big upside is possible on these stocks. And then you had some more gains coming in on the likes of Symphony. That stock is up about 7%. But of course, overall, and of course, NCC and IRB, along with KPIT Tech, so some of the more sort of liquid names with higher volumes, these were stocks that managed to find buyers. But overall, Anuj, I guess, I mean, not a very good day at all from any stretch. I guess it all depends on whether tomorrow we can, make an attempt at the recovery.
Yeah, but the move on Bank Nifty today was a bit damaging because, right now showing you classical indicators of that move that we saw being at risk, that two-day move, yeah. Because it was led by banks, and today's decline was led by banks, and in that IT making a move once again on the upside, and rupee also weakening a bit once again. Let's see the FI number today. That I think will be interesting, Surabhi. But let's take some final thoughts from our guests. Then, Ashwani, what next to watch out for then on the Bank Nifty? 300 lower today. What would be the sacrosanct stop for positional longs?
Well, on both Nifty and Bank Nifty, we have your favorite 20 DMA halt now, and sometimes that can show good follow through. As far as banks are concerned, this is way too strong for a pullback. Pullback is 100, 150 was fine, but this is stronger than expected, and maybe at least on banks you could see immediate follow through, but Nifty could hang around a bit and then come off. Only if today's high is taken out, then we expect a resumption of the rally. Otherwise, the downside is likely to start again. And given the way large stocks, large private financials are falling, we need to see which way they go from here.
Ashwani, to your earlier point, when you said that if private sector banks start going the PSU way, then I think we all pack up and go home, right? Then traders just take a big break, find a nice island to move to, right?
See, it's a normal market phenomenon when the market cap of a sector becomes way too large. Then these are issues which are waiting to happen. Remember, Sun Pharma became larger than Reliance, and after that what happened? So I think it's time for banks overall and financials, the weightage of that sector to come off. So now you'll have new excuses every day. And yes, private sector banks could get into trouble, because the point is, nobody knows what is next, who is next. And that way, in this uncertainty, I don't think people are going to stay with financials in an overweight situation.
Well, let's move on now. The top team at Warburg Pincus, the single largest shareholders in Capital First, speaks exclusively to us for the first time after the IDFC Bank merger announcement. Now, they say that they have no plans to exit the merged entity. They've also told our colleague Nisha Podar that with investments in Bharti DTH, the fund is hoping to relieve the same Bharti magic they created a decade back.
The consumer trend being one that we've played over the years, including in Bharti originally and more recently in things like Kalyan and Biba and others. And Bharti DTH in that sense is a play on that same theme, that rising consumption, access to high quality entertainment. Obviously it is, special for the firm and for me to have the chance to work with Sunil again. He's someone that I got to know well in the late 1990s. He's always typified to me what is the true spirit of Indian entrepreneurship. And I think for both of us, we're going to try to see if we can find that magic again.
All right. So Bharti Group magic on the other side, it's the relationship and the kind of trust that you've built over the years. But Vishal, overall television is considered to be a dying medium. I hope not here at CNBC TV18, but that is considered. Now, what is the main strategy and the philosophy behind investments in a DTH kind of a play? And does it also mean a further consolidation? How do you see the future of this business?
Look, without getting into too much detail on the specific transaction and Bharti DTH, is two things. So the good news you and I can agree on is I don't think television is a dying media, particularly in India. In fact, I'd even go one step further. We were investors in a company called Dainik Bhaskar, which is print media, as you know. And at that time, print media was dying all over the world. Print media in India continues to be alive and kicking. So forget television. We think television will be there for a long time. I think the way television is distributed is changing quite dramatically, from analog to digital, partly because of the government push to digitization. And when you think of India and Bharat, which is the parts of India outside of Bombay and Delhi and Chennai, those areas to get to by DTH is really the most cost-effective and sensible way to do it. So that's really the thesis. There's a lot more factors, but we're excited about it.
But more consolidation on the back of this particular investment can be expected or no?
Anything is possible, but with or without consolidation, we think there's a tremendous opportunity for Airtel DTH to grow, to create a great customer value proposition and create value for everyone.
You've made some fair bit of investments. Let's start with Capital First, and that has seen a large transaction with merger of IDFC Bank and Capital First. And market understanding as per the merger swap ratio is that it is in favor of Capital First shareholders. Are you happy with that kind of a return?
If you back, really world-class management teams, you can do so at very sort of high returns on capital and returns on equity that are attractive. And financial services at its core have always been a way to play the economy more broadly. And for a couple of decades, that's been a very powerful trend. Again, a lot, not necessarily even, but on a secular trend that's quite positive. Capital First is one we're quite proud of. We acquired control of it from the Future Group behind Vaidyanathan, really transformed the NBFC from a wholesale-oriented book to a very consumer SME lending one, built a really robust franchise. And in some ways, the opportunity now combined with IDFC Bank is the chance to take that to the next level, chance to create a bigger platform, to essentially combine the strengths of both of the institutions and create something larger. And I'd say, from an economy-wide point of view, the India has need for more bigger financial institutions that can underpin its continuing economic growth. So it's a story we like, and in some ways this merger is our reinvestment in that story. And so we're quite excited about it.
So for that to happen and to have a more supporting role in terms of really taking Capital First IDFC-backed merger to another level altogether, Vishal, do you think that a board seat is something with 10% stake that Warburg Pincus will end up holding in the merged entity? Is that something that you're really looking at?
I don't think that the transaction is not contingent on Warburg having a board seat or anything. I would actually look at it, if I just step back, a couple of questions you asked. I think really you have two complementary businesses, and you had Vaidya and Rajiv on your channel and your show, and you grilled them already, so I don't want to repeat what they said. But to be honest, as Chip said, the opportunity to build something special, I think, is fantastic. As we look at it, we want to be supportive shareholders, supportive investors, and for us, it's really a reinvestment decision. We talked about the swap ratio, so I'll just give you an interesting story. I've spoken to a lot of shareholders on both sides, and there's a bunch of them that feel Capital First didn't get a good end of it, and there's a bunch of it that felt IDFC Bank didn't. So what that probably means is it's a fair deal.
Are you happy as an investor with the valuation? That's all I wanted to ask.
So to be completely honest, I actually think the swap ratio is not relevant. What we think is relevant is the opportunity to put these two complementary businesses together and create something that is multiples of where it is today. So, I mean, if you ask me as an investor, I'm thrilled with Capital First as it was. Vaidyanathan's done a great job. This is not, I just want to point out, it's not an exit for us. To Chip's point, it's a reinvestment. So for us to stay in this and own 10%, we have to be prepared to say, we're in here and we think the next many year story is exciting for us to make multiples from where it is today.
So no exit on the horizon even in a couple of years is what I wanted to check.
A couple of years is, I mean, it's impossible to answer now, Nisha, but that is not the mindset we have. Going in, the mindset is not a couple of years mindset. It's a mindset of it will take time to build this institution. And as long as the opportunity is there and the value creation is there, we'll be there with it.
And just one more regulatory aspect. To be at 10% and above, you need RBI's approval. Do you have that already?
No, we'll apply to RBI for permission to go from 5 to 10%. As you know, in the past, RBI has been open to providing that to fit and proper investors. But we'll go by the directions of RBI.
All right, on to another exclusive conversation that Lata had earlier today. She caught up with Brian Moynihan, Chairman and CEO of Bank of America. She began by asking him if the year ahead for global markets looks like a calm one or whether we should expect some volatility.
Start off with volatility and as people repositioned, and you know, after the holidays there's always a period of something, and you see that people come back and move their money around, but it's stabilized, and you know, in the end of the day, the market's going to reflect long-term the power of the companies, and the company's going to reflect the powers of the economy. And as you think about it, you know, the world economy is growing. It's projected, we projected to grow at 3.7% for the 2018. The U.S. economy, we project to grow at 2.7%, and so you know, those are good things. And so ultimately, the market will reflect that. It may bounce around on the way there, but it will ultimately reflect it.
Yes, but a lot of growth or more than expected growth can also be a bad thing for volatility. You know, we saw the U.S. treasuries, 10-year treasuries go all the way to 2.95. Is that threat over? Have the markets got used to higher yields? Or if 3% or 3.1 were visited, we could once again see volatility?
Well, I think the treasury moves are a lot of factors there. It's what's going on in the markets, flight to quality, a view of where interest rates are going, a view of inflation, and all that gets factored in. But people have to keep in mind about the U.S. interest rate scenario. Since 1950, when they started quoting the 10-year, if you go back in Bloomberg and look at it, you'll see that across all that time, the amount of days it's ever traded under 3%, other than in the current period since the 2008, 2009, are very few.
Very few.
So the interest rate environment is very low, and the Fed is trying to normalize the front end rates, as so-called, and the back end rates will reflect that also. So I think people take a lot of stock, but it's only back to where it was a couple of years ago. So it was here 2 or 3 years ago, 14, I guess it was 3 years ago. Now moving to a 4, and people weren't that excited about then. It all comes down to what your views of inflation and growth are, and that's what you heard more noise about.
No, that's true. I mean, but you know, we've had low rates for 10 years now. Probably we have a generation of treasury guys who haven't seen rates at 4%. I mean, therefore your thoughts this year, at least in 2018, are we likely to see a lot more of, choppy markets?
Well, the reality is in the United States especially, what you've seen is the duration of recovery is one of the longest known.
Yes.
And so, people then think that, well, around the corner something has to go wrong, but you have to back up and think about what's going on. Unemployment at an all-time low, wages starting to grow a little faster, the Tax Act coming in and providing a benefit to companies in both how they conduct business around the world, the territorial part of it, and lower rates in the United States, which helps provide more cash flow to finance activities. And so all that is very constructive for the markets, while at the same time, as usual, everybody always worries about what could go wrong, and that's what they look for. And so you'll see momentary ups and downs, and we came off of periods of unprecedented low volatility and unprecedented low rates. So the idea of the 10-year moving between 2.5 and 3 is not exactly a high interest rate environment, or the volatility moving back up to more normal levels. So watch it play out, but the reality is, in the end of the day, these markets and these things will reflect the status of the economies around the world for each of the individual markets, and it's pretty constructive. We have, this year is a pretty constructive year for the markets in the United States and around the world.
Okay, on that note, we will take a quick break. On the other side, Manisha Gupta joining in with all the currency and commodity market action of the day.